Okay, welcome out to the Coaches Mailbag. Actually, let me share my screen. And here we are. This is our Coaches Mailbag, and Coach T from Tackle Trading got a really good question coming in from one of our students, and wanted to highlight it for this edition of our mailbag. Okay, so this one says, Tim, this may be a topic for the halftime show or the podcast. Nevertheless, here is my question. By the way, this is all paper trading. I purchased 100 shares of Facebook and placed a covered call on it the day after earnings. I purchased the stock for 176.56 and then sold the 180 call option for 5.9. So the break-even price was 174. The trade was up 365 on the 3rd of August when Facebook closed at 177. Yesterday, the 6th of August, it closed at 186. So the stock jumped way up. And now it's down $100. Should I have closed it last week? So let's start with that. Let's deal with the long call question here in just a minute. Number one, and by the way, this question comes from R. Lee. And Lee, it's great to have you send in a question. I'll get to your long call question as well. I think there's some confusion, Lee. I'll explain why. You don't lose on a covered call if the stock goes up. Now, you might lose independently on the leg that you've sold. But if you're watching Facebook and Facebook is sitting at, and I know it gapped down, it's not the perfect chart for it, but just kind of follow the concept. If it was sitting at $177, okay, is the stock price. And you conversely set your offer for the call option at 180. So you sell a $180 call strike price. Now you got money for that, right? That's your credit, but you're actually giving up the right to your stock at 180. So essentially what you're doing when you do a covered call like this is you're capping your trade to where you can only make up to 180 plus your credit, okay? Now, if I'm looking at this, you actually sent me a picture here, and obviously great to have you doing this paper trading stuff and learning this way, Lee. This is the way you do it. You'll notice inside your Thinkorswim, it had that folder in your single, okay? So you are losing money currently on your call option. This little position right here, FB for Facebook, is on the 180 call. You're losing. But you are profiting. If I peek down here at your stock, you didn't mean to send this part to me, but your actual stock has nearly $1,000 profit. So what happens with a covered call is you have two positions. And by the way, they're designed to where you're probably not going to make money on both of them. It's a natural hedge. So what you've seen in your trade is your stock is up money. Okay, but your call is down money. Now, I got to tell you this. That's what it's supposed to do. The best case scenario for a covered call is that the stock goes up, they take the stock from you, and you make your maximum profit. The fact that you're losing on your call option was a part of the strategy that you chose with the covered call. So the advice I'd give you is combine them together. Part of your confusion is coming because you've got this split in your statement to show your call option separate than your stock. Now, you can do it that way as long as you understand the overall philosophy and flow of how you're going to trade a covered call. Now, the second part of your question, two different long calls on Facebook. They're doing much better. One contract at the 165, currently up $700. Two at the 170, currently up $1,200. I'm having trouble managing the covered call. I have several stocks that I've purchased to do covered calls on. I'm having trouble. I have even been assigned twice, once on Trip for 3 contracts and once on EWW for 1 contract. I don't understand how a 17 August covered call couldn't make money if the stock is going up. And hopefully I think I've answered the whole thing. It is making money. I'm going to give you some advice. Okay, I'm going to give you some advice. Number one, this is a topic we've probably done more content on over at Tackle Trading than any other topic. And as a matter of fact, if you go to Tackle Trading, click the search button, type in the word covered, click go, and you've got all these different results, but you want to view all the results, okay? Over here, there's a ton of good ones, option theory, environmental hedging, how to manage the risk in a covered call, go and study up, right? I think that there's a disconnect between what you understand and what you need to understand, okay? And there's a lot of content. But if you're looking for just one source instead of a bunch of them, go to tradingjustice.com. And in the blog, click on blog here, and I'll send this to you in an email as well, Lee. Put in the word covered. The classic approach to cash flow trading, this one on June 4th. I wrote this blog. I talk about how you do it, what the overall philosophy is, you know, how to get into a covered call, how to manage it, so on and so forth. These are all ones that I wrote. The Poor Man's Covered Call was a podcast episode. This one from November 8, 2017 is kind of just a digest of what the philosophy, the construction, the management, so you get a better idea on how to manage these positions. Yeah, hopefully you got a few tips from today. You got to better understand how that whole thing works together, you know, and they do need to be combined, and you have to have specific rules on what to do with the 180. All right, guys, that's been our Coaches Mailbag. And Lee, I love the cover call. Final bit of advice, and let me pull this back up. Don't assume that the call options are a better strategy for you long-term just because this time they're making more money. Remember, that's the design of the strategy. Now, what happened is you made a really good trade on Facebook, so the calls make you more profit, right? So when you are right on the direction, you can make way more money on the calls. You're up $2,000 on those. The covered call is up about $800. If you take the position where you have the 1,000 profit, subtract the $100 loss, your covered call is not up as much money. But remember, it's positive theta, it's positive cash flow, it's a different design of a strategy, and this is why you need a system and portfolio design. All right, guys, if you are a trader and you want to learn from us, tackletrading.com, the Tackle Trading YouTube page, go and like and follow and find us on Facebook, Twitter, all that kind of stuff. This has been Coach T. Get in the game.